audited financial statements. And Nikki, do you want to say anything before we turn it over to Brad Shelley?
We had a really good audit this year, and Brad is here to talk to us about it and answer any questions.
Very good.
Is this, I move with this? Yes. Yep. Well, good morning. My name is Brad Shelley. I'm a partner at Crow, and glad to be here with you this morning to walk through the draft of the financial statements and a couple other reports that go along with that. With me today I have Senior Manager Shelby Lee, who really manages and oversees the audit process for us. And so I'll go through kind of some of the highlights of the draft reports. Feel free to ask questions either during or at the end. Either way is fine with me. So before we jump in too far, I did want to kind of just set the stage as far as new accounting standards, new auditing standards, things of that nature. No new accounting standards this year that really had any kind of impact. You may remember from previous years, seems like every year there's been some fairly significant audit standard, whether going back several years to pension, through the last couple of years we had leases and subitas that we had to look at, and Nikki and her team has had to deal with going through those and figuring out if there's an impact. So this year, easier approach, nothing there we had to deal with. Were new auditing standards that we had to implement though, and so that was a little bit more work on our side to get a little bit more information about your systems and some of the key areas, really kind of expanding on some of the documentation and testing that we have done in the past. So outside of that though, pretty consistent, and that's so you should be able to compare numbers from the prior year financial statements to this year and not have to factor in any kind of new standards or things of that nature. These are, again, a draft of the financials, so if you have any questions or comments or proposed changes, we can take a look at making those before we finalize. Let's go back. So this is our independent auditors report, and these few pages here are the first report that we're providing to the board of directors. Outlines our opinion on the financial statements, so that is why you hire us, is to perform testing over the balances and transactions during the fiscal year into June 30, 2024, and then to provide an opinion on those on the testing that we performed. We are providing an unmodified opinion, which means that's the highest level of assurance that we can provide. They're free from any material misstatements, and so you can rely on these financial statements. The one thing to point out in here that's a little bit unique is it does include the fiduciary activities for the pension plan, and that is on a different year end, so that's why you see the December 31, 2023 year end. That's for the fiduciary activities. For your regular operating activities of the transit agency, that's through June 30, 2024. This also outlines the basis for our opinion, the responsibilities of management. So ultimately, management is responsible for these financial statements. We do assist in the preparation of the financial statements, but we're using the trial balance and the supporting schedules that management has provided to us. It also outlines our responsibilities from the audit standpoint. Nothing in here has really changed. We're going through and doing a variety of testing procedures to come to this conclusion and provide this opinion. And then we have a required supplementary information schedules here. There are several in here. So the management discussion and analysis, which is the first few pages we'll go through. And then there's a few supplementary schedules related to the pension plan that are in the back part of the financials. We are not providing any opinion on those, and that's consistent with previous years. And then lastly, we are reporting under government auditing standards as a governmental agency. So this leads into the management discussion and analysis part of the financial statements. This gives you an overview of the financial transactions, summarized at a little bit higher level, and really meant to provide a little bit of context to the transactions and balances at the end of the year. I'll go through just a couple of pages here so you can see some things that I think are always interesting. The first part at the top of the page is some operating activity, and I always think this is helpful to understand, just as you're going to start looking at the financial statements, what is the operations, what's been happening during the year. So you can see from a passenger trip standpoint, that has increased from about 3.7 million to 3.9 million, almost 300,000 trip change increase there. On the flip side, you see the vehicle revenue miles and revenue hours are down a little bit. Not near as much of a change, but you do see some decrease there. So that just gives you a little bit of context from an operational standpoint, as then you go into the financials and look and see, how did you do operationally, financial-wise. The first part of this at the bottom of the page is your assets, and this is comparing 2024 to 2023. And again, the fiscal year is June 30. Obviously, some pretty significant changes there year over year. Current assets down almost $8 million. Most of that is on the cash side of things, as you spent additional dollars. Did not have the COVID money coming in this year to supplement some of that. And then you also will see on the next couple of lines there, the net capital assets increased $6.5 million. So that's a big chunk of that decrease in current assets is the decrease in cash, and then you're paying for the capital assets that are increasing there. And that's mostly new buses. I think there were 10 buses that were purchased during the year, some new CNG equipment, things of that nature.
Nikki, how much did you say you're expecting from the federal government?
$4 million.
Four?
Mhm.
That is also there's a little bit of probably timing in there, as far as the timing of when you get the grant contract signed. So I think this year, some of those contracts that usually get signed around the end of the year, first part of the next fiscal year, didn't get signed until after June 30, so you weren't able to recognize revenue and receivables for that. So you'll see that revenue shift into fiscal year 25.
Do you know when you think you're going to get it?
They shut down, their fiscal year starts October 1st, so they shut down, they shut down today through mid-October. So I'm hoping by November.
The other change that you see here that's significant is the net pension asset. That's one you don't really have any control over. That's mostly this year is driven by positive investment returns within the pension fund. But again, that fluctuates year to year depending on estimates, assumption changes, and the market value of the underlying assets. But nonetheless, a positive increase this year. And I think it's important to note that it is a net pension asset, whereas you see a lot of entities that are underfunded and have a net pension liability, in some cases pretty significant. So a good position to be in from a pension standpoint. On the flip side of that, you see deferred outflows of resources. So some of that, again, that's all related to your pension. We'll see some more details of that later in the footnote disclosures. Overall, your assets and deferred outflows, pretty consistent, a 1% increase this year. On the next page is the summary for your liabilities and your net position, kind of the other half of your statement of net position. You'll see not huge number changes, but fairly significant percentage-wise, an increase in current liabilities. Most of that's just within your accounts payable, accrued expenses, really a function of timing of when those are paid. So nothing there to really be alarmed by. You see the deferred inflow of resources also increased. Again, that relates to the pension and how some of those activities during the year are recognized. Some of those are recognized during the year, some are recognized over a 5-year period, and that's what you're seeing there. And then your net position is kind of your equity. If you think about it from that standpoint, from a for-profit standpoint, is your equity. You see overall a decrease of about $1 million. So pretty small change there, about a 1% change, similar to your asset change. Again, the change in classification there is related to your the capital dollars that you spent. So you're seeing net investment in capital assets increase because that reflects your capital assets less any related debt. And then your unrestricted is decreasing. Again, that's related to paying that out, and also the fact that you don't have some of that grant revenue coming in this year, and that won't come in until next year. So that's a pretty high-level overview of the balance sheet. Or any questions there?
Brad, just explain the first bullet.
Mm-hmm.
Current assets decrease primarily due, etc.
Well, I think as I read this, I think we have a typo. I think the second part of that should be decrease. So the current assets decrease due to the timing of the grants receivable. So that's what I talked about. Sometimes that grant contract will get signed at the end of the fiscal year, sometimes later. That's part of it. And then the other part of that decrease is the cash, and not having the cash from that, and also paying out cash for the capital assets. So.
I made myself a note.
Yep.
Not sure I understand what this means.
Nope, doesn't make sense
Doesn't-
as currently worded, and that's why it's a draft, right?
Yeah.
But thanks for pointing that out. We'll get that fixed. Any other questions here? Okay, so we'll move ahead. I'm not going to go through all of this. You can see here at the top of the next page, the capital asset expenditures for the past 2 years. I don't think I mentioned this, but the management discussion analysis is a 2-year window at the financial transactions. You do present your financial statements on a single-year presentation, which is what we commonly see. The MD&A section requires you to also compare to the prior year, which I think is helpful to understand trends and things like that. So you can see here about $10 million of capital purchases during the year. As I said earlier, mostly in bus purchases. And then you do have some equipment purchase, which that was mostly some CNG equipment there that makes up that $1.3 million. And that's in greater detail at the bottom of the page. Top of the page is the prior year capital assets. And then the bottom of the page here is where I kind of wanted to focus next. Summary of operations and changes in net position. This just gives you, again, a high-level comparison of your operating revenues. So pretty even this year, which makes some sense when you look at the operating information at the very start of this presentation. 1% increase in operating revenues, pretty much flat on operating expenses, which is good. And then you see it's going down a little bit here to your non-operating revenue and expense, a pretty significant decrease, but that is, again, related almost entirely to the COVID dollars and spending the rest of that. So those dollars are all gone now, unfortunately, and so you see the much lower and much more normal, I'll call, amount of non-operating revenues and expenses back to kind of the pre-COVID time frame. That brings it down to the gain or loss, in this case a loss before capital contributions of $4.8 million. And then you did have capital contributions of 3.8 that offset that. And so your change in net position is a decrease of about $1 million, which is about more in line with, again, pre-COVID types of situations. I don't expect to have a change in net position of a positive $21 million probably anytime in the near future.
Not without a pandemic.
Right. Which hopefully we avoid.
Exactly.
The next page gives a little bit more of a breakdown on the revenues. So you can see the operating revenues there, and again, not much change. And your non-operating revenues, again, that's primarily related to the federal dollars. I did fail to mention earlier, part of that decrease is also the new market tax credit. As that all folded up last year, you did see a gain from that. Obviously, that's all done and closed at this point, so no activities there this year and none moving forward. On the expense side, again, a little bit more detail into the operating expenses. Nothing too significant year over year. If you look at that far right column, that's your change in percentage year over year. So for most of the categories, pretty minimal. General administrative, a slight uptick. Non-vehicle, a slight downtick, but nothing too significant. And then this is the summary of the cash flow activities, and again, this can be kind of summarized as what we talked about earlier. You had an outflow of cash primarily related to capital activities and for the operating activities. All of your grant dollars, that comes through in the non-capital financing, so it gets a little bit convoluted in there, and you can see more detail as we get into the actual statement of cash flows.
How close are we to the pre-pandemic revenue? I guess fare box revenue.
Fare box revenue, I think we would still be a little bit short. Maybe probably a couple $1 million before the pandemic, right?
Yeah, it was two, we
Oh,
look
did it
back,
get that high?
Yeah, I think.
2016 got up to 2 million.
Oh, okay.
So we're probably 800,000 short.
Yeah, I wasn't remembering it that way. Okay.
From here, we get into the
was
basic
that?
financial statements.
Excuse
Go
me.
ahead. Yeah.
It's 2016 before the first UK contract?
No,
Okay. All right, never mind, go ahead.
I won't spend much time here unless, Nikki, if you want to add anything to this. This just gives you obviously much more detail of what we just talked about and the balances at the end of the year. And again, from the statement of revenues, expenses, and changes in net position, you can see in more detail the activities during the fiscal year. In the statement of cash flows, this is where I was saying you can see a little bit better in here, I think, as you look at kind of the different categories. You're changing cash from operating activities, so the property taxes, any grant revenue, anything along those lines, that doesn't factor in, that's not considered operating activities. So this is what you would typically see, a significant cash outflow, and then you'll see the significant cash inflow from non-capital financing, which is your federal, state assistance and property taxes. Those pretty much net out to zero. So I think that's always something to take a look at when you're looking at those two categories. Where does that kind of gives you a picture from an operations standpoint as how you're doing. And then you get into the capital and related financing, and this is where you had the purchase of capital assets of about $10.5 million compared to capital contributions of a little under $4 million. So that's really driving the change in cash.
For me, Nikki, just a question on that. So
Mhm.
we bought a bunch of buses, obviously,
yes.
and the money that we used to buy those buses came in the year before.
No, it's on a reimbursable basis. Part of them we've been reimbursed for. 1.2 million will come from the state for the VW
Yeah.
settlement, and the rest has come from FTA that we've already received.
Oh, okay. All
So
right.
we still, between the 4 million with FTA and we would still receive about 1.5 million from the state.
Okay.
The next couple of pages are the fiduciary financial statements. Again, this just is the pension activities. So about 21 million in pension assets. As you would imagine, most that's in investments or cash. It's all restricted for pension. And the additions and deductions during the year. You can see the main change here is the appreciation and fair value of the investments. So your net increase in net position was 3.4 million. 3.2 of that was the change in From here, we get into the footnotes of the financial statements, and I'm just going to skim through a few of these, and if you want to stop and look at anything, I'm happy to do so. But note one, no major changes in here as far as any kind of new accounting policies I mentioned. There's nothing new that was required to be implemented, and Lextran hasn't, modified any policies in any significant matter. So nothing really changing through here. The one thing to point out is there was technically one new accounting standard that was implemented, GASB 100. There was no impact from this. This was only if there was any accounting changes or error corrections, and there were none. So technically it was implemented, but no impact from that. Note 2 goes through the cash and cash equivalents and some of the various risk disclosures related to that. Note 3 discloses your capital asset activity, which we've already talked about. Note 4 is related to fuel availability and diesel fuel, and this is one where I think as we move forward, this may become less of an issue as you continue to move towards more CNG and electric buses. So I think some of the dependency on the diesel fuel and the pricing of those will change, and so this footnote may change into the future. But currently it's just disclosing, you do have those contracts, or that contract, and in September 23 there was an extension on that contract.
How many diesel buses are in service?
Probably 30 left, something like that.
Probably at least a third of the fleet.
All right, so the buses we bought last year, did we put that expense when we received the buses or when we order them?
When we receive them.
When we receive them. So we have those, and then we've got 6 more.
Mm-hmm. And we do have more CNGs than we do diesel.
Yeah, that's good.
Mm-hmm.
Okay.
Note 5 discloses the little bit of lease activity that you have here. Most of that related to the tires. That's not applicable under GASB 87, so nothing really major recorded there. You're recognizing that expense as it's incurred. You don't have any type of asset and liability related for that. Note 6 discloses the fiduciary fund information, and primarily information about the investments that are within the fiduciary fund. No changes there. Note 7 discloses the required information about the pension plan, so kind of separate from the fiduciary fund, even though that is the pension plan or the pension fund. Note 7 is disclosing the pension liability and the changes in that liability and the related transactions there. So on page 27, you can see the net pension asset and how that has changed from a $621,000 asset to about $3.8 million. Again, most of that is in the net investment income. The bottom of the page, something I always point out just because I think it's interesting for the readers to see how much of an impact some of the estimates have in this. So as you look at your discount rates currently at 6%, if that were to change up or down 1%, you can see what that pension asset would do just based on that discount rate change. So when I started out on the top saying you don't have much control over this, this is what I'm talking about. You don't have a lot of control as rates change. If that rate were to, decrease by 1%, that's going to significantly impact that pension asset. And then, as I mentioned, you do have some deferred inflows and outflows, and you can see what that is comprised of here. And these are recognized over the next about 5.5 years, as you can see there. Also disclose information about the defined contribution plan. And then we get into the supplementary schedules of the pension information. I definitely will not bore you going through all of this. So we work towards having 10 years of information here, and I think we're at 9 years if I'm adding it correctly. So we almost have the 10-year schedule complete. Next year we'll have a full 10 years, and then it'll continue to be 10 years after that.
So then all the numbers will look smaller.
And there'll be, yes, the font size will get even smaller, and you'll have to zoom in even more.
So the net position as a percentage of the pension liability are in a good position.
Yes, so the things I look at here are on this schedule, the planned fiduciary net position as a percentage of the liability. This is essentially showing if it's overfunded, underfunded, where you're at. And you can see from the first year in 2015, when this was required to be implemented, you were 84%. You're now at 122. So very good position to be in.
What do you see at other agencies?
All over the board.
Okay.
It's all over the board, depending on, some have their own plan, some participate in a local, a county, or a state plan. Those typically are not as funded. So in those situations, they're seeing they're underfunded, they have a significant liability. I would say, comparing to all the different transit agencies I work with, you'd be in the best position from a pension standpoint for sure. We don't often see a position where you have a net pension asset. I do think it's something to monitor. I mean, if it were to
Sure.
continue to grow, there's no need to overfund it by a significant amount, but it's certainly better to be in this position than underfunded.
It bounced a little bit the last 3 years.
Yeah. The next part I want to move into is the single audit part of this related to the federal awards. So you can see here, this is your schedule of expenditures of federal awards during the year. About $4.5 million, obviously much less than in previous years when you had the COVID dollars, as you spent the last bit of the COVID here, about $786,000 this year. This is more in line again with what you saw pre-COVID. And again, the primary program here is the Federal Transit Cluster, and all of these grants included here. So that is the major program that we tested. We do have 2 reports that go along with this. The first is in relation to government auditing standards. And so this is specific to the financial statements and including the schedule of expenditures of federal awards. Did not identify any material weaknesses or significant deficiencies in internal control, which is what we're noting here. And then did not identify any other types of compliance matters as we went through our testing. So a clean audit opinion on this report. And then the next report is specific to the major federal program, which is the Federal Transit Cluster. So that's about 7 or 8 different grants there at the top of the CFA. Comprise the Federal Transit Cluster. That's the majority of your funding. That's the one that we tested. And again, did not identify any issues in internal controls or in compliance as we went through our testing. So that's really what that is all saying. This gives a summary of that, so you can see everything on the right-hand side is where you want to be. We're providing an unmodified opinion on compliance of the major program, the Federal Transit Cluster here, and then you do continue to qualify as a low-risk auditee. That's everything from the financial statement standpoint. Any other questions before we jump quickly to the couple of letters?
Real quick.
It's a big committee today, so it's lots of...
On the 401(a) plan,
Mhm.
how many participants are there?
It's currently administrative employees. They're about 30.
Did the union employees have an option to save more?
They have an option to contribute, but they do not have the matching.
Okay, so does
So they have
anybody-
401K, but not 401A.
Okay. Do many of them participate?
No, maybe 15, not very many.
So So we'll move on to the letters at this point. The first one here is just one page, referred to as the management letter. This again is where we would disclose any material weaknesses or significant deficiencies in internal control, and we don't have any to disclose here, so this letter is pretty easy to go through. If you go to the next letter, this is our audit communications letter, previously referred to as a SAS 114 letter. And this just goes through a variety of communications that, again, we're required to have with the audit committee or the board. I'll go through this quickly. Outlines, again, our responsibilities in the first couple of paragraphs here. We are independent from the authority, so it is important that we're independent from you all, otherwise we can't provide an independent auditor's report. We do provide some other non-audit services that are listed there. So again, preparation of financial statements, the schedule of federal awards, assist with the data collection form, those types of things, which are all allowable, but nonetheless something we have to make sure that management is ultimately responsible for those. The next section here just goes and provides a little bit of information on the scope and timing of the audit. Nothing has really changed there. So we did have discussion on the 29th. We always open to feedback or information as it comes to us by the audit committee or others. We take that into consideration as we go through the audit process. As I mentioned, no new accounting policies are significant. There are a number of accounting estimates that are part of the financial statement process. The key things here to know is nothing's changed in those estimates and how they're derived. The processes, we still look at those, still deemed to be reasonable and consistent. The next section in the middle here, excuse me, would be if we identified any types of inconsistencies or and how you were posting transactions, etc., we would make you aware of those. Did not identify anything there. And then the last part on this page and onto the top of the next page are the corrected and uncorrected misstatements. So those would be the audit adjustments that we posted, which were none, and then any misstatements that we identified that were maybe not material and so they weren't posted, but we did not have any of those either. So again, very clean audit process. And then the last part of this and on to the next page is some other communications. Again, just some other information. We did not have any significant difficulties or disagreements with management, no other contentious matters. We will provide a management representation letter once these are approved and we're ready to finalize. And that's just essentially the letter that is saying you've provided us all the information that we need for the audit, you haven't withheld anything from us, etc. So that's the only thing that you'll see here in the affirmative as you go down through this list, and that's here at the top of this page. So that's everything I have from the audit standpoint. Again, appreciate Nikki and the rest of the team's assistance. Always super prepared. I think that makes our job easier, and I know Shelby and Sarah and our team appreciate that when we can jump right in, get through the testing, ask questions, but not have to wait on information and really kind of drag it from them. So really appreciate that, and again, very clean audit results.
When do you start the process typically?
We usually start in May or June and do part of the year, and then they come back in August to finish up everything.
That's pretty good.
It's also one of the earliest to finalize, so a lot of our transit agencies may not finalize until, definitely at least October, but a lot of times November, December, and that's not even necessary depending on the size. So I think it just, again, lends to how prepared they are on having information for us and how quickly they can close out year end and have financial statements and
Is
information.
most everybody on a July 1st start date of the fiscal year?
I would say the majority, I don't know percentage-wise, but definitely the majority of transit agencies across the country are on a June 30. Some of them are on a September 30. There's certain states like Texas and Florida that are, the government agencies are typically a September 30. There's a few that are on a December 31, but the majority are June 30. Anything else for me? Or Shelby?
I don't have anything else. We appreciate what you do. Obviously, we appreciate what Nikki and her team, Holly and others do to participate. Fred, do you get involved much in all that process?
I am touch points here and there.
Yeah.
I'm not nearly as involved as, but I get questions here and there. Shelby asked me some questions, and nice conversation about it, so.
And we do still have the NTD process to go through. We provide that agreed upon procedures for the NTD data. So that's kind of the last thing for it's not part of the audit, but it's part of the overall services that we provide. So that'll happen next month.
Heavily involved in that one.
Yes. That's what also reminded me of.
Nice.
Yes. We appreciate you and your team.
Absolutely.
Thank you.
So does the reason we're finished earlier than others is because we have to report it earlier?
It has to go to the city on September 30th.
Okay, so we have a deadline,
Mhm.
and it's not too many days away.
Definitely not.
Okay, very good.
All right. Thank
Brad,
you.
Thank you.
Thank you.
So, Brad, you come back for the board meeting next time? Or what do we do?
Yes, either Shelby or I will be at the board
Okay.
meeting. Yeah. Haven't worked that out yet.
Okay. All right. That's good. Sort of business.
I think that's it.
That's it.